Are you ready to try your hand at placing your very first stock trade? Then check out our free guide, 10 Steps to Choosing Your First Stock to Trade, the Ultimate Beginner's Guide. In this free download, you'll learn how to choose the right kinds of stocks and how to find them, know when to buy your stocks and when to sell them, and you'll learn how to take your very first steps to becoming a stock trader and much more. Grab your free guide now by going to TRADEway.com/guide. That's TRADEway.com/guide. Hey guys, I'm David Mitchell, founder and CEO of TRADEway. What if God Himself gave you a blueprint for how to handle your money? Well, the Bible is a practical book. Let's dive in and see what it has to say about wealth, about risk, about leverage, and about investing, and uncover how trading in the stock market can be a powerful tool for moving towards your biggest goals. We're so happy you're here. This is The Word on Investing. Hello everyone, welcome to our podcast. Today I want to talk about a question that we deal with a lot at TRADEway, and it goes like this. What drives the market? What is it that makes stocks do what they do, or bonds, or any of the other markets? So that's what we're going to talk about today. I think it's a great question. It's also a greatly disputed question. So I can only give my opinion after 40 years of experience in the markets, and that's what I'm going to do today. So we have what we call in our company a three-legged table. Picture a little table in your house with three legs. What happens if you put some little pretty things on it and then all of a sudden one leg is pulled out from under it? Well, the whole thing falls down. So we feel like you need to have these three components in every trade that you do, especially if we're talking about stocks and options trades. And here are the legs: fundamental analysis, market tone, and the charting, which would be called technical analysis. So let's talk about these three things, because I think you could put everything in the world that drives the market within one of these three areas. But we need to also talk about how these three areas interrelate, because I can remember when I was at Baylor, when we were in the MBA program, we had a quantitative analysis class, and the professor gave us quite a few articles to read that seemingly proved mathematically that a chart will not predict the future. If you just chart the price points of a stock going up and down, it will not predict the future. Well, I sort of doubted that when I was in school, because my grandfather lived east of Baylor and he was making a lot of money in the stock market, and he seemed to be predicting what the stocks were going to do. He wasn't investing so much as he was trading. Now, his trades were not day trades. We don't even advocate that at TRADEway. But they were a little bit longer than the trades we might do today. His trades might last, say, 6 to 9 months. But he would get in and out of these stocks at opportune moments. So I knew that the quantitative analysis professor was missing something, but I didn't really know what it was. I just didn't believe what he said. Well, it turns out, nowadays, looking back on it, I do believe what he said. But the key is, no one that knows how to trade only uses a chart. You always have to look at fundamentals. You always have to look at market tone. And when you put those two items together with the third one, which is the chart or the technical analysis, then you get something that makes a big difference. Now, if I ask the question, can you tell the future? My answer would not be no, nor would it be yes. It would be not all the time. You can't tell the future all the time, but guess what? You don't have to be able to have potential to make money in the stock market. So here's what I believe about the whole thing. So let's start with fundamentals. Fundamental analysis is where we look at a lot of different things about the particular company whose stock we're trading. We look at the management. Is it great? Is it powerful? Is the CEO somebody that Wall Street respects? Have they done a good job in the past? Are they doing a great job now? We look at the products. Are these things amazing products that people have to have? Are they products that are so needful that the market just can't live without them? And is the company capable of coming up with new products as times change? You ask those questions. And then you run the ratios. You look at the earnings per share ratio. You look at the price earnings ratio. You look at these kinds of things that tell, is the company growing quarter to quarter? And that's how we would know if it's a growth company. And a growth company is the kind of stock that we want to be trading in. Now, Fundamental analysis is really important, and there's no doubt that it can drive the market for that particular company or stock, because think about it, a great way to prove it is go check out a chart and look at what happens on the quarterly earnings report dates. You will see that stock in many cases will jump either up or down. It may even gap up or down. So what is it that caused that? Well, it was the fundamentals of the company that were reported in that quarterly report. Now, you could put that under the leg called market tone, because market tone includes news. And it was a news item about that quarterly report. So it kind of takes in both of those points. But you can see we're talking about the fundamentals, because what happens in the quarterly earnings reports, the main thing they're looking at is sales, comparing it to the past. They're looking at earnings, comparing that to the past. And they're also looking at the economy and how it affects their company, and they report on all that. So it deals largely with the fundamentals. And obviously that kind of information can drive the market. Okay, so there's no doubt that fundamental analysis, in other words, the fundamentals of a company, can drive the market on that company at certain times. And it tends to be around the earnings reports when it has the biggest effect. Now, sometimes they'll drop news and come into the market tone component here that we're going to talk about next. They will drop news on purpose in order to cause their stock to move up or down, or at least attempt to cause it. Like they may put out a report about a brand new product that's coming out. You know, companies like Apple, it can have a big effect on the stock. So that falls under the next item of market tone. So let's talk about that for a minute. Now, market tone, to me, has two components. It has the news. It has economic news and just world news, like a war in Ukraine, for example, can affect stock prices. So it's kind of all about news. Now, you can put that into two subdivisions. Economic news, like government reports. For example, the inflation reports lately have a big impact on the market. That can drive the market. And also things that the Fed are thinking about doing, that can drive the market. So all of that falls in the category of market tone. And I really feel like it's pretty big in driving the market, but I don't think it's the most important component, but it's really big. Now, sometimes when we talk about market tone at TRADEway, we include charting of the S&P, not charting in general, but a chart of the S&P 500, because that represents the market better than any other index. And so if you chart the S&P 500 index, you can get a visual of what the market's doing. And you can use what we're going to talk about under the charting leg of the table here in a minute. You can use those same ideas to give some ability to sometimes predict what the whole market may or may not do. And we'll talk about that when we get to charting, but that's one component of market tone in my book. So market tone is basically economic news, world news, and the S&P 500 chart that we look at. That helps us kind of understand the temperature of the market. I mean, is it a hot bull market? Is it a bull market that's been too hot, so it's about to correct and move down? Is it a bull market that's in a correction, or is it about to turn into a bear market or a downtrend? And all those things are important, and the charting of the S&P can show that. But the market tone news component, how do we look at that? Well, here's what's interesting. I believe that part takes longer than any other thing we teach in TRADEway to get a grasp of. So one good thing about it is if you go out to TRADEway.com and you take advantage of our educational programs, you're going to see an awful lot about market tone in there. And what you're going to learn about is that it's usually just one or two, at the most three important news items at any one time that affect the market at all. Now, what's interesting about it, that means all the rest of the news articles are junk, right? But it's really hard to learn the difference. In fact, I think it takes trading through several bull and bear market cycles, and by that I mean many, which means several years of experience to get very good at market tone. So here's another thing you'll find out there at TRADEway.com is that these programs we offer, usually when you take advantage of them, nearly all of them include our market alerts. The market alerts go out daily, sometimes more than once in a day, and they give you our opinion of what the market's doing and why it's doing it, and what news items we're seeing that are affecting the market right now. So those 1 or 2 or 3 news items that are important, you'll be hearing about them in your market alerts all the time. So we're going to help you with the market tone, because when you're new at this, that's really difficult to know how to do. You'll get it wrong nearly all the time. So we're going to provide that for you with nearly all of our services. So go out there to TRADEway.com and check it out. Now, market tone, eventually, after you've traded for quite a number of years through several different market cycles, you will have related the news that you've been reading with what actually happens in the markets and whether or not that news affected it, which news affected it, and when that news affected it. But you can see that takes some time. So I think it's great when you're new to rely upon the market alerts that we provide. And so market tone obviously affects the whole of the market, and it certainly can affect your particular stock. So one approach I like to take is I look at the broad market first, which is pictured by the S&P 500 chart. And I'll take a look at what news items I think are affecting the overall market. Because think about it. If the whole market is in a bearish mood and it's just really negative out there, the news is negative, everything's negative, do you really want to go out there and do an up play? In other words, buy a stock or buy a call option. It will only work if the stock moves up. Well, I don't think so. I think you want to try to match your stock plays with what the overall market's doing. In other words, you could think of it as the ocean. When the tide goes out, all the boats go down a little bit lower, even the great ships. So when the market tone is negative and the whole market is moving down, even the great stocks out there, the best stocks, can move down. Especially if you get in a bear market, they will move down with the whole market. So you want to kind of line up your plays with what the overall market is doing. And market tone is so important in figuring that out. So like if it's a happy day on the market, everything's booming, everything's a bullish market, then yeah, think about buying a stock or buying a call option, doing something that would make money if your stock went up. On the other hand, if the market is really bearish and just negative and all the news seems so bad and it even feels that way out in the world, then you want to be looking at some put options because they have the opportunity to make money when the stock goes down. So you match your strategy with the market tone. Now let's go to the third part, the charting. And you say, well, David, I thought we were talking about what drives the market. The charting just shows you what's happened in the past. Well, it's really interesting how often you can look at a chart and it will tell you what that stock's about to do even before the news does. Because think about it, we don't get the news all that quickly. I mean, a lot of times by the time we see a particular type of news that might make us think we should be selling a stock, the big boys already had that news and they've already sold the stock, and now they're about to get ready to buy it from you when you sell it because they've already driven the price down. And you're selling at a time when they're starting to jump back in the market because the price is lower and they want to buy low and sell high, right? So they have some access to the news before the retail investor gets access to that same news. And so sometimes that chart is better at letting you know what kind of strategy to use than the news is. Now, you have to be looking at the news, but mainly that's because you want to know what the overall market is doing. It is important from time to time to look at the news on your particular company of the stock that you're buying, of course. And when you get close to that earnings report, it's best to just go to cash because you don't really want to be in a play during the earnings report unless you're doing a specific strategy taught out there at TRADEway.com that has to do with earnings report strategies, where we teach you the rules for that. But in general, a new student should go to cash before the earnings report happens. Why? Well, because I've seen so many cases where a company gets great earnings and the stock goes down. Why? Because the big boys have already driven it up. They're taking their profits. And right about the time you think the earnings report is great and you buy the stock, it tanks because the big boys jumped out of it. So you cannot really predict how earnings reports are going to affect a stock, even though you think you might could. It's really, really difficult. So we do have strategies for that, but they've got their own sets of rules, and you need to kind of become an expert at that before you try it. So generally, be out of the market during the earnings report, then see what happens with the earnings report, see if a new trend develops, and then jump back in and play the trend. Now, we talk about the trend, so let's move to the third leg of the trading table. That's charting. We sometimes call that technical analysis, but it's where you take the price points of a stock every day, or even you can even do it every minute, and plot them. And you look at that over time. And then there are ways that you can draw certain lines like support and resistance lines. You can look at moving averages. You can even see patterns that they make. And you're looking at the connected dots, right? The price point action. You also look at the volume bars to know, for example, when a stock is moving up, is the volume increasing or decreasing? Because in order for it to be the big boys moving a stock up, that's really what you're watching for. You want to jump in right after they do. When the stock first makes its first move up after it's been moving down for a few days, it should have higher volume than the day before and higher than average volume. And if it doesn't, I'm not convinced that's the big boys doing it, so I don't really play any part in it. I'll wait for that. I'll wait to see that on the chart. But charting is so fascinating because once you learn how to draw those support and resistance lines, which we're probably going to talk about in our next podcast a little bit, but once you learn the skill sets for that and you learn how to recognize certain well-known patterns, then yeah, you can predict what that stock's going to do sometimes. In fact, I believe enough times to do really well in the stock market. So you don't have to get it right every time, because what do we do when we get it wrong? We stop it out. We take a reasonably small expense. And then when we get it right, we want a reasonably large profit. And if we do the math that way, we don't have to get it right more than about 6 out of 10 times in order to have potential to make great money. So the charting is really, really important. I cannot tell you the number of times that I have seen the chart predict what the stock's going to do better than the news and better than the fundamentals. Now, I still believe in looking at all three all the time, but if I'm going to look at the most important component, I'm going to say it's the chart. I do agree with those studies I read back in college that proved mathematically that a chart by itself cannot predict the future. But when you combine it with a company that you know already has good fundamentals, which means they got great products, they got great management, they're going to tend to go up anyway. Then when you see the chart predict that it's going to go up, you have a better chance that the chart's going to be right. Now, if you add to that market tone, which is all happy and positive and the whole world is just doing great today, and you see all three of those things saying this is up, it's going up, and you're at a good buy point on that particular pattern, then why not push the button? I mean, you're not going to get it right every time, but don't ever think that you need to. You don't have to. You need to get it about 6 out of 10 times, and I bet if you practice and get good at this, you can do that. So that's what I believe drives the market. I think it's a combination of fundamentals of the company, market tone, what the whole big market is doing, the S&P 500. I like to chart it, look at it, see if I think it's about to have an uptrend or not. If it's all happy and moving up and the news is great and my chart says I'm in a good buy point for an up play on an up pattern or an uptrend, I'm going to push the button. All right, so that's how I look at it. I hope that'll be a great help to you. And hey, by the way, if you like this, why don't you rate and review it for us so it'll help other people find it, and hope you have a great day.